Our next guest knows a thing or two about the decision to stay private or go public. Neil Blumenthal is here. He's the CEO of Warby Parker. And our guest host, Xander Laurie, CEO of SurveyMonkey, is also here. It is great to see you both. You are here wearing your glasses, though the reason I said to you, are you wearing your glasses because you just came out with contact lenses. So this is like a big deal for you.
It was great. Our biggest sort of brand launch since we launched in 2010. And actually, our decision to launch contacts was thanks in part to this man and some of the research that we did through SurveyMonkey. We're able to understand what our customers want, and over 40% of our customers also wear contact lenses.
Okay, I want to get back to the Warby story in a second, but I do want to talk about this sort of private market valuation issue, and I want to talk about sort of what's going on in your space, because there's been such a development of business-to-consumer, direct-to-consumer products that seem to be working. We were just talking about this Peloton ad, which seems to... You think the Peloton ad, by the way, is working for Peloton?
A lot of press helps raise awareness, can help drive sales. And know a lot of the folks there, including the chief brand officer, and she's not sexist. But it's important when you're doing creative that you get a lot of different perspectives before you launch. But there is a lot of attention being placed to this ad.
But to the larger piece, and the reason I was going to Peloton and this whole direct-to-consumer thing is you have private companies that seem to have enormous valuations, and yet somehow they get into the public market, and we now realize, or there's a new appreciation that maybe these things don't work the same way. What is it? Were investors wrong the first time? Were the private investors just fundamentally wrong? The public investors looking for something else? Or is there even something else happening?
If you just look at where the equity gains have come over the last 20 years, they're primarily driven by the United States compared to Europe and Japan. And within the U.S. market, it is tech. It's internet and software is the #1 industry that we export out of this country right now. And private investors have been the beneficiary for a long time, funds that got access to great companies like Warby Parker before the public markets. And I think today's market is just more discerning. If your gross margins are down in the 30s or 40s, you're not going to generate the kind of robust cash flows that these companies would have expected.
Okay, so Neil, my question to you, though, you are a private unicorn. You're on the board of another private unicorn, Allbirds. Is Sweetgreen, you're on the board of Sweetgreen as well. Is Sweetgreen a unicorn these days?
It is.
Okay. It's got a stable of unicorns.
Is a stable of unicorns right over here. Okay, so the question is, over the past 6 months, as this sort of revaluation has happened in the public markets, is there a new conversation happening in the boardrooms of companies like yours and the other boards that you're on saying, okay, we have to rethink this sort of growth story versus profit story versus how we're going to think about this?
Yeah, the pendulum is definitely swinging from, it seemed like it had gone a little too far to growth only at the expense of profitability. But at Warby Parker, we've always believed in sustainable growth. So that's ambitious growth, but improving every metric in the business. And we've been profitable for, last year was our first full year of profitability, our first full year being cash flow positive. So if you manage your business appropriately and not, try and swing for the fences every single day at the expense of sort of long-term profitability, then you can sort of maintain unicorn status, whatever that may mean.
Go ahead.
Yeah, I just think if you look over the last 10 years, you took on this kind of sleepy industry that was dominated by a monopoly, started as direct-to-consumer, and now in this retail apocalypse, you guys are opening, I think, 100 stores around the world. Maybe just talk to us a little bit about where the journey the company's been on over the last 10 years, because you seem to be like a salmon swimming upstream.
Yeah, so, for us, it's just what do customers want? How do we deliver exceptional customer experiences, great value? When we started Warby Parker, less than 1% of prescription glasses were being sold online. Now it's about 5%, and we're the main piece of that and the main driver of it. So we want to be where our customers are. They enjoy shopping for glasses, and if we're able to create a great experience, then they'll come in.
How much do you think it was about creating this brand, though? Because there's such sort of a brand equity at this point with Warby. And the reason I say that is you also can go online now, and there's so many people trying to knock off what you do.
All these pitches are now, we're the Warby Parker of X fill in the industry. So it's become a real zeitgeist nomenclature.
Yeah, I think a lot of people get it wrong, though, because to be the Warby Parker, you have to provide, great value. So $500 product at $95. Great customer service. Our Net Promoter Score has been in the 80s since inception. You have to have a brand that's relevant, right? Glasses are a core part of someone's identity, so that brand needs to stand for something, and we stand for doing good in the
Do you
world.
think glasses will always be part of people's core identity? Meaning, now that you're getting into the contacts business,
Yeah.
now that there's all sorts of science and other, people are doing lasers. I mean, all of these things. 25 years from now, will people wear glasses? Do you ever think about that as an existential? Is that if you ever go public, will that be a risk factor in the S1?
I don't think so. Glasses, LASIK has been around a long time. People still wear glasses. Wearables is certainly real, but I think we're 10 years away from something that is really functional and has a strong use case. And even once it is something that people wear regularly, it's got to look good.
Neil, talk to us about being a CEO in this environment, the culture of your employee base, what's important in building that kind of robust culture.
You have to live your values every single day, and if you're going to create shareholder value, if you're going to create great customer experiences, you have to retain great team members, and they have to be able to bring their whole selves to work every day, and you have to set the tone. And we're also in an environment right now where it's really easy to offend somebody. So
Okay, this is back to the OK Boomer.
Bring Joe to work
situation.
day.
Yeah.
Well,
Yeah.
But so what's going on? Do you think there's a fundamental shift in what the employees are actually expecting? Is that real? Do you see that?
I think it's real. I think there was always an expectation that you should come to work and feel a sense of belonging. But that expectation, is more heightened in today's environment. And it's also able to, those voices are thankfully able to be heard more loudly now.
Right.
It's important for us to make sure that everybody has a seat at the table, so that way we do create inclusive experiences.